Hey y'all, welcome back to my channel. Thank you so much for tuning in. This week I don't have a markup video, obviously, but I am going to review my trades that I posted last week, and I'm also going to take a look at what happened in the market so far this week. I think the way it played out last week is a very great opportunity for review. Excuse me, I don't know why I made that face. I was trying to think of the words to say, but I think it's a very good opportunity for review. So without further ado, let's get into it. All right, so I'm gonna start with AU. Well, actually, let's start with UC because I wanted to talk about AU a little bit more, especially with how it played out. All right. So I marked AU up in both ways. That's what you should always do because you never know what the market may do, even if it's giving you lots of confluences that is going to go in your favor. News could come out and could completely change that. So it's always a good thing to mark up in both directions. All right. So let's take a look at UC and see what we have going on over here. This is my markup from last week, but I was pretty confident that it was going to be a sell because I felt like this structure here and this structure here showed a double top, which is a reversal pattern. And give me 1 second. All right. So you could also use the bar replay tool. That is like a premium plan. That's very essential tool to use if you like to review. I don't really review that much, so that's why I don't have it. Or if you need to place multiple alerts than what TradingView allows on the basic plan. So also I noticed this trend line here, point A, point B, point C, or A, B, C, whichever way you want to do it. I said that the market was most likely going to retest all of these points. So far, it's at point B. Let's look at entry, a good entry point. Let's go. Okie doke. So this candle here, in my opinion, would have been a great candle to enter on once it closed on the 1 hour, because that's the time frame that I'm currently on. So each of these candles represents an hour. It came back and retested entry perfectly, which a lot of times once a trade begins, that's what it will do. And if you missed entry on this candle, this would have been a perfect time to enter or to place a second trade, also going in that direction. So came down and really gave you a pretty clean trade up until right about here, which it then gave you a tweezer bottom, I believe this is called, and went all the way back up almost to your stop loss. So let's see. But let's see, I'm trying to think, when did the week start? Oh, I'm recording with my phone. So anyway, this week's, okay, yeah. So the 25th, and then this week started April 1st. Okay, yeah, so all of this stuff happened last week. Let's see how many pips this is. So that was a pretty good trade there, almost 50 pips. That's pretty standard for AU. When you see other pairs like GA, GU, they tend to give you 100 to 200 pips per move. But for this pair, that's pretty standard. So it would have been good to get out on once you saw this candle, which is like a reversal pattern. That would have been your signal to, okay, let me take what I got and get out. Or if you were looking to swing trade, meaning you were looking to hold this trade for a couple of days, maybe a week, you could have stayed in, but in my opinion, I definitely probably would have gotten out at that point, especially once you take a look on the 4-hour. But instead, what the market did was you could now look at this as a double top, or you could look at this as a double top, signaling that it's still going to reverse and go back down in a sell direction. So I point all of that out to stress how important psychology is with trading. You can have all the skill in the world, but if your mindset isn't strong and you're always looking at the charts, you're always wondering what's going on, you can easily jump in and out of trades, losing money instead of just letting it play out. And this week seems like it's going to continue all the way down to here, but we shall see. What I'm going to do now is show you a good place, or show you markup for the trades that have already happened pretty much. So the market opened Sunday, and this is where we would have been at. So I can honestly remove that stuff now. All right. Okay, so when the market opened, it would have been like right about here, which is a great place to put whatever. Okay, so honestly what I would have been looking for, and probably would have put array here. I'm looking at this like, what? So this is where the market closed. Probably would have targeted right about there. And why I say that is because you always go back and look at what price did in the past, and that is how you get your support and resistance, your horizontal levels, whatever you want to call it. I also would have been wary probably right around, maybe right around this area. I would have been like, okay, if market hesitates around here, I'm going to get out. And then I would have obviously marked up, put my buy entry here. Let's do that because it gave you kind of like a fake out, actually. So, and a fake out is when market moves into that direction. However, it doesn't go far and it reverses and goes the other way. I probably would have targeted it right about there. Or here, maybe. You get the idea. All right, so yeah, if you would have gotten into the sell, you probably would have gotten in on this candle here. Market faked out and went into the buy direction. When you are looking to get into another trade after that has played out, this is some consolidation right here on the 1 hour, meaning it's just going up, down, up, down, up, down, up, down. Not really going far. So I again would have placed buy entry here, stop loss here. If I was looking for a sell entry here, stop loss there. And so I would show you that there. And that in itself is a 60 pip trade, damn near. All right, enough with UC. I want to go to AU. That's really what I wanted to talk about from last week, because that one, it gave a fake out in either direction. So let's take a look at that. All right, I might have to upgrade my plan because all this moving back and forth is a little too much when I could just bar replay. But I already started the video, so. So let's see. So on as far as AU on this candle, I would have entered here. It's very important. This is why risk to reward ratio is very important, because you can mentally withstand all of this goo goo gaga stuff that's going on, because you know that if you do lose, you're only losing a small percentage of your account, which you should only risk max 2.5% per trade. So in terms of, let's say you are doing a challenge account, let's say you have like a 25K account, generally I want to say profit target is about 2,500, I want to say. 2,000, let's just say 2,000, depending. That could be 8%. If it was 10%, it would probably be 2,500. I'm not good with math. I'm recording with my phone, so you get what you get. And let's say per day you were not supposed to lose. Per day you were not supposed to lose more than $12.50 a day. Overall, 2,000 of that account, which would be 8%. 2,500 would be 10% of that account. So even though you may have 25K to trade with, you may want to place a trade that's worth 5K if you win. Okay, that would be cool, but that means if your stop loss gets hit, you're probably going to be losing like 2 bands and you're out. You're out of the game at that point. So that's why risk to reward is important to follow, because mentally you can sit back and relax knowing that if you do lose, you risk the right amount for your account. And I feel like the way AU played around last week is a perfect example. All right, so gave you this good entry candle here. Once it closed on the 1 hour, would have gotten in, stop loss down here. Another point, I will always place my stop loss just a few pips below the price action. Because let's look here. You see how this wick came down and pretty much hit where price had stopped before? You would have been out of the trade. But if you place it a little bit below, you would have been good. All right. So came up, retested this last high here, and went back up. Good, good, good. And you would have thought that it would take off all the way up there, but it only went about a good 30 pips, which again, I said that on AU, a good trade is about 50 pips, so you're 20 pips off. I would have taken that and run with it. Now, when the market started to play around about this area here, some people would get scared and get out. However, I think it's important to let trades just go ahead and play out. And if your risk is appropriate, you can sit back and let it do that instead of getting scared and jumping out. Because even though it did eventually hit stop loss, you never know like what it's gonna do. It could play around, and then shoot all the way up here. I also think it's important to let your trades hit stop loss, so that way you're not playing this mental game of, oh, you got out right here because you thought it was going to hit your stop loss, but it still went back up. So just place the appropriate amount for your stop loss, and if it hits it, that's okay, because your account is still in good standing, and you can then confidently jump into the trade going into the opposite direction. All right. So then looking at AU, you may think that, okay, it's gonna turn into a sell, okay? Especially this here. This could kind of be considered a double top. And it did kind of go down into the sell direction. However, it faked out that way as well. And that's okay. Sometimes you're going to be spot on with the market. Sometimes you may be right, but the market is going to play around how it is now, and then it's going to go into that direction. It doesn't mean you're a good trader. It doesn't mean you're a bad trader. As long as you're following your plan, the market's going to do what it's going to do. And just how UC played out so beautifully, but AU wanted to mess around, jump around, do this, do that, that can play with your psychology big time. Now, I wasn't actively trading last week, so it was very easy for me to just sit back and let this play out. It was also very easy for me not to look at the market for a couple of hours. If you're looking at the market every 5 minutes, you're going to see all of this crazy stuff happen, and you're going to get scared and get out. But if you follow your trading plan, you risk what's appropriate for your account size, you can let all of this junk play out for hours and you won't see it. You'll come back when it's halfway to your TP, or you'll come back when it's back up here, or you get what I'm trying to say, okay? So that's a very important thing with trading, because if you're always looking at the market, looking to see what it's going to do, you get scared. Your psychology gets the best of you. So hopefully that made sense. I don't consider myself the best teacher, so bear with me. That's all I have for you guys this week. I hope you guys enjoyed the video. If you have any questions, comments, not concerns, because what are you going to be concerned about? I don't care. But if you have any questions or comments, please leave them down below, and I will get back with you guys. And as always, happy trading.